Hello and welcome to the EU recap. So in EU, I didn't get any trades today. So there was an opportunity, but price didn't tag me in. So let's see what's the pre-session analysis and how did the price action play against me. So this is actually the daily chart where you can see the price has swept this liquidity, this sell side liquidity, and it has also swept the previous daily liquidity. So the definite draw on liquidity for today would be this high. And why? Because price can take out this previous day high. Also, this is a fair value gap. So price can go up to fill this fair value gap. So multiple confluences adding up. Actually, there are four confluences adding up for the price to go up to take out this high. So in what about in 4-hour time frame? 4-hour is bullish and internal structure is now bearish. But I'm expecting the price to go all the way up here to fill this imbalance because that's what the daily is. The daily drawn liquidity is. So if I jump into the zoom into the 4-hour internal structure, then I can see this is my strong internal high and this would be my weak internal low, and this is the ground liquidity that I marked in the daily. So, but there is no clear chalk up for the price to identify a PY where the price can come down and then we can push up. So I think I must look into the H1 to find some sweep zones and trade accordingly to target this buy side liquidity. But in H1 has a very different story. It the swing structure was bearish. I expected this was my drawn liquidity, but before this we are having H1 strong high. So it's kind of contradiction. So I could have changed my strong high from year to year and mark this as an internal structure, but I just stick to what I marked yesterday. So if this fails, then I could reanalyze the market structure and then I could, remap the market structure. But for now, I assume this to be my strong high, and I waited for this fractal low to go off, and then I could look to trade the, that fractal, the bearish order flow till it takes out this H1 swing low. So this would be the phase A shots. As expected, price made a bearish chop. So this would be my POI, but this is a very, very low probability POI. I'll tell you why. Because high time frame narrative supporting the bearish time frame idea. Actually, this box is actually not ticked. Actually, this is first one not ticked, and medium time frame POI is 4 out of 8 criteria met. So let's see. I actually took this POI because essentially I'm trading this POI only, not this POI. This is after chop. So price is reacting coming off from this POI. So it has actually 4 out of 8 criteria met, and inline with immediate order flow. Yes, price made a bearish stock to inline with immediate order flow. So it's not a high probability trade, it's just a medium probability trade with there is no high time frame support. What does high time frame tell you? High time frame is telling you that the price can go up to fill this imbalance. So what criteria did the POI fill? It has sub liquidity. Yes, it has sub liquidity. It has displacement. Yes, it has made a shift in the order flow. It was unmitigated. It did not have an inducement. So that was the only issue. So it was formed during the kill zone. Yeah. Uh, and it did not flip any flip, and it is not actually a flip zone. So 5 out of 8 criteria met, which is more than enough for me. So what are the risk factors? Price may go further up to mitigate the 4-hour supply. Actually, I was having this in my mind. Strong rejection of the Asian lows. This may indicate that demand may be in control. The same thing that happened with the GU. Anyway, there was a small H1 Visa liquidity, which boosted my confidence that okay, I'm not trading with using M15 lit like I did with GU. I was trading with LC1 with H1 lit, which has a bit of which adds bit to the strike rate. So this is what it looks like. And if I jump into the M15 and the price took this liquidity, I set my stop order here, stop loss just above, and waited for the price to tag my in. This is how my stop loss, my order looks like. Stop loss just stop order below, and stop loss order just one pip above. But the next candle, this candle actually, yeah, this candle took out this high and also took invalidated the PY. So there was no trade and I didn't get tagged in. So it was 11:10 and price took the last supply that held a strong H1 swing high. So there was a more chance for the price to take out this strong swing high. So if the price takes out this strong swing high, then you know what does the daily time frame change? Price can go up all the way up to some supply and then it can push down. So I will modify the H1 swing structure according to the high time frame. So I waited for that to happen, but price actually liquidated the H1 swing high and then it pushed down. When eventually price took out the H1 swing high and now it's bullish. So price took out this strong liquidity and we can expect a push down tomorrow. So let's see how the prices happen to be. Then just give you a glimpse. Yeah, I modified my swing structure. So my swing, earlier this was my swing boss, but I just modified my swing boss from here to here. So this would be my swing boss, and this would be my swing low, which is yet to be taken. So, but still, price didn't mitigated this uh, overall supply, within which we are having H1 supply. So it is what it is. Let's see. I'll just recap this for you tomorrow. But for now, I didn't get any trades on EU on July 31, 2024. Thank you. Hi and welcome to another daily recap. Today I'm going to recap day 69. It's GU and it's July 31, 2024, Wednesday. So today I took a loss on in the London session and it was actually phase A short. But actually when I after taking the trade after the end of the session, when I analyzed reanalyzed what happened on the session day uh, on the trading day, then I realized that I actually was trading a range. So let me show you what actually analyzed and let me also show you how my vision broadened and how I gathered some more information to understand that the loss I took was not a valid one. So let's start. First and foremost, I should have avoided trading because there was a ton of news here. But sometimes what happens is that our analysis may be correct, and if you don't set your take profit, the news can make you 6 or 7 or in just a single minute. And then after 2 to 3 minutes, you can close your trades. Like you won't be breached by the problems. Like the trading window is 2 minutes before and 2 minutes after. You should not take profits or you should not place the trades. So what you can do is you can take off the take profit and set alarm at one if it's 1:30 p.m. you can set alarm at 1:35 and you can come around 1:35. If the price is in your take profit level, you can stop it and you can take whatever profits you get. So that is my trade management system for the news. So actually I love trading with the news. So let's start with the daily analysis. The swing is bullish and the internal is bullish and it has come to this demand zone. So what I expected is price actually rejected off from this demand zone and there is an inside perform. So possibly this is a sign of indecision. So possibly I expected the price to go up to make a bullish chop so that it can start go up and take out this weak internal high. That was my expectation. And you can see price mitigated the daily demand, thus waiting for the price to shift bullish to target the weekend run. Very simple. And in 4 hour, also the swing is bullish and the internal is bearish, and this is the internal range that we are dealing with. So let me zoom in. So this is the internal range that I was dealing with, and price has tapped into the 4 hour demand, which is inside the daily demand. So this has a very high chance that the price can take out the strong internal high. Also, this QI has set liquidity and it has all the liquidity criteria. So I was expecting the price to go up to take out this strong internal line. But the caveat is there is no bearish chalk for me to confirm that the price is going to go up. The bearish chalk is right here. So I need to wait for more confirmations for the price to for me to understand that the price can go up because it's like a I know that this may form a bullish order flow and the strong internal high can be taken. But that pattern, that bullish chalk, and then a freshly formed POI. So that pattern has given me a lot of profits in the earlier days. So I kind of like that pattern. But when thinking out of the box, I can also look to find the order flows and trade along with the order flows. So there is no clear bearish chalk for me to confirm that the internal low could be targeted. So the internal high or yeah, okay, yeah, correct. The internal low could be targeted because I'm I'm not expecting this demand to hold and then go up. I'm just trading with the order flow. But there is no, bearish stock. Also, there is no bullish stock as well as there is no bearish stock. So it's kind of price is ranging. So this I identified only after the post-session analysis. So there is no bearish stock. So I can't take shorts and there is no bullish stock and I can't take longs. I'm expecting the price to consolidate for a while before it makes action move. Actually, I anticipated this one. Anticipated that the price is going to consolidate, but I didn't implement it. That's why I took a loss. This is H1. H1 swing is H1 swing is bullish and internal is bearish. This is a weak internal high, weak internal low, and strong internal high. This is a good POI. Also, you must keep in mind that there is this POI, this pivot POI, which can be which and there is this liquidity. So price can take out that liquidity, tap into this POI, and this strong high can hold, and the price can come down. So there was that possibility. But since the weak low is in immediate vision, and there is a ton of low resistance liquidity in the Asian eyes too. So price may not, go all the way up to tap into this POI and then come down. So price can just tap into this POI and let this strong high hold, and then price can come down. There is a possibility. So though this faces high probability and this POI has swept liquidity and as Asian eye as its inducement, I'll be a bit conservative and look for H1 shift bearish before taking shots from here as there is a range seems to be too large for me to enter directly. I also looking for LC2H or LC2Bs in the lower time frame to sell this POI. So the conservative approach would be wait for the M1 H1 shock and then trade from the freshly formed POI using LC1, or you can directly trade with this POI using LC2A or LC2B. And this POI is a very good POI because it has swept liquidity and it has imbalance and it has, made an order flow shift and it's formed in the London kill zone. Yeah, I think yeah, it's formed during the trading session. It's not during the spread hours. It was formed during the trading session. So it has a good high probability that this POI can hold. And I was desperate to target this weak internal low. I had one more idea that this was a bearish stop. Suppose if the price took out this bearish stop, if the price comes up, I would be happy to trade with this POI, looking for LC1, and then price can go down. So my bias was very clear that I'm going to take bearish trades. As expected, price made a bearish stop, and then this is the POI that I was expecting the price to hold. Actually, I expected this POI to fail because there is another POI above. But now there I was trading from this POI with Asian eyes above. So very risky trade. So yeah, this is actually phase A. Targeting in the internal structure is also bearish, swing is also bearish, fractal is also bearish. So that's why this provoked me very long because market structure has aligned itself. High time frame narrative supporting the medium time frame idea, but it is a medium probability trade after all because the MTF POI 4 out of 8 criteria is not being met. This is not a POI, this is just an block which made a shift in order flow, and it is in line with the medium time frame order flow. So sometimes it may play out, sometimes it may not play out because since it's medium probability, it has only 50% of strike rate. So it's just 50-50. My high probability trades almost they are having 80% strike rate, but this medium probability is just having 50% strike rate. So it may or may not play out. So these are the POI criteria which just got met. It didn't. Yeah, you can assume that it just swept liquidity. So it does not have any displacement. It made an order flow shift and it is not unmitigated actually. So this box is not there. So one, two, it does not have any inducements and it's not formed in the kill zones. So yeah, it has fit an order block. So this is the order block here, and price has reacted from it and then pushed up, and then boom, it took out this demand zone. That's why okay, there are some chances that the price can hold because major confluences are there. The thing is, yeah, if it has actually swept liquidity and then pushed down. So there are some confluences. So I thought, okay, 50 chance. That's what trading is. I just entered the trade. Risk factor, there is another supply above. Price made a strong rejection of the Asian lows, which may indicate that the demand has stepped into the market. So this rejection also gave me some kind of fear of entering the trade. In past, these kind of when I see these risk factors, I don't take trades because the fear of losing kicks in FOL. So that's why I just changed my mindset. Okay, risk factors are there just to tell me why my trades are losing. But there are other ton of confluences which can play out. So it's just 50-50. If it plays out, okay, fine. If it does not, that's also fine. So thing is, I must not expect anything from the market. That's the only criteria I'm maintaining in my mindset. So I took the trade, and there was this liquidity, like the price actually took this liquidity. So this was a strong rejection. You can see this was a strong rejection, which gave me another confidence that okay, price can push down, and this was M15 led, and I placed my trade, and this was a very big stop loss. I think 13 pip stop loss. So 13 pip stop loss, around 28 pips take profit. So entry method was using M15 LC1 led. So yeah, three risk factors like supply above, strong rejection of the Asia, and POI didn't satisfy all the criteria. But it is almost satisfying my medium probability criteria. So fine, I was fine with it. I'm just going to enter the trade. I entered, placed my stop loss above, my stop order here, and I got stopped out. I got tagged in. Price went few pips below, and then it boom, it pushed out, and I got stopped out. And actually, once the price went up, there was an LC2A formation there. Price gave a slight reaction and took out my stop. I expected the price to at least take out the weak internal low, but rather it made equal lows, and then yeah, I thought of bringing my trade to break even when the price took out this internal weak internal low, but it just made an equal loss. It is what it is. So now I'll tell you why I should not have taken the trade. If I jump into 4 hour, you can see that this is the price is ranging after this huge push. You can see the price is just ranging after this huge push. The price was still ranging within this candle. The price has not broken out of this candle, so this is everything's a range. So I need to wait for the price to come out of the range so that there will be a clear bullish or bearish bias. This is the range that I was talking about, but I took that range as swing structure of the H1. So also you can see price came down and again it started to range. So my actually I should have waited, I should have been patient till the price mitigated this extreme supply. So since it's phase A, I was so much excited and I took the trade. It is what it is, but what happened is price made a chalk and it's around 425. So I thought of taking the second trade when the price mitigates this supply because this is the extreme supply above which price cannot go if the internal bearish order flow is to continue. So there was no price didn't mitigate this M15 H1 supply. So it's already 425 and one more candle, and this candle was already 25 minutes old, just 45 minutes, and even if it goes up there, I'll not be getting any M15 pullback inducements. So I just left the desk with one losing trade. So let me just show you what happened after that. Yeah. Uh, yeah, actually, price didn't tap into the PY guys. Price didn't tap into this PY. In the New York session, price started to come down. But yeah, today actually it tapped it and then boom, took out the swing up. So this was the PY that the price was targeting, but it was very late in the session. So definitely it was not my trade. It was someone else's trade who was trading during this time window. Okay, see you tomorrow, guys. Bye. Today it's just a one losing trade, so just rinse and repeat. So ultimately, over a large number of trades, I would end up profitable. So having a macro picture and executing the micro picture is a skill that every trader must acquire. So thank you, guys. Bye. So let's start the analysis of the third pair, which is gold. And in gold, also there is no trades today. For gold, there is nothing to say today, but let's do the pre-session analysis and then see why the what happened to gold on this day. So the daily structure, the swing is bearish and the internal loss, the swing is bullish. and the internal was bearish. So price actually tapped into this daily supply, and I expected the price to come down because price can take out this peak low, and also there is this equal low form. So a ton of liquidity below. So price I expected the price to be bearish today. Okay, and one more thing, price actually tapped into the optimal trade entry point. So, and also price, this is Monday, and uh, there was the Monday candle was followed by Tuesday. So Tuesday candle, high chance that the Tuesday candle will be followed by Wednesday. So I said there was this strong intuition that the price can go up to take out this strong internal high because it is hot. It has reached the optimal trade entry point for one, and second, these three candles indicate that there is no the manipulation is already done and there is only distribution happening. So this is the 4-hour chart where you can see the breakout structure and the swing is bullish and the internal is bearish. And this is the current internal range that I was dealing with. If I zoom in, you can see this is the 4-hour internal structure that I'm dealing with, and the fractal structure is also bullish. Okay, okay, yeah, actually the price has tapped into the the 4-hour supply, but the fractal structure is still bullish. So what I can expect is only when the price takes out this um, makes a bearish stop, I can expect at least the price can go till this 4H demand. So I was waiting only for that. So this is H1 and H1 swing structure is bullish. This is H1 weak and H1 strong. So this is the current internal range that I'm dealing with. This is internal strong because the internal structure is bearish. So this is internal strong and this is internal weak. And within since this internal structure is very small, so I decided to mark small internal ranges within this one. You can see the small internal structures. Currently, the small internal is bullish. So zooming in into the internal structure, you can see that the small internal is currently bullish, and we are having this small internal which is strong, and the weak small internal is not yet formed. So what actually I tried to play is I was trying to expect the price to make a bearish chop so that I can play the small internal pullback. And see, I know the terminology sound very complicated, but it's just more mapping market structure from the high time frame perspective to the current price action. Let's see price tap into the 4-hour supply, which I already know, and there is also this H1 supply. So since this range is very large, so I can't trade with directly into LC2A or LC2B. I need to wait for this bearish stock. Then I can trade with confidence and take shots and play the small internal pullback. But till 2:30 GMT +1, there was nothing. The price could offer me. There was no chalk. There was no bullish chalk. No, there was no bearish chalk. Nothing. Price just consolidated within this box, both London as well as New York. So there was nothing that I could do. So I just left the session without any trades. So this is the only script that I took in the entire trading day. So tomorrow I can expect that either the small internal pullback to start and this weak internal low could be taken out, or this strong internal high could be taken out. So if this happens, then probably I can look to remap the market structure because it looks very clumsy, and I need to have three levels of structures in order to find the current order flow. So probably I'll be eliminating, you know, the small internal structures by mapping out my making these swing structures very small. So that's recap for tomorrow. But for today, there is no trades because there was nothing in the gold chart. Thank you guys. Bye.